the best founders, they see the world as it could be more than as it is. The clearest sign is that most people think it's a dumb idea.
Too few people have original ideas is maybe the way to put it. And too many people chase other people's ideas or fads. I hope we can all be original thinkers in our lives.
The best decisions come from places of confidence and curiosity rather than fear. Not taking risks is a risk.
Welcome to the next episode of the Entrepreneurial Excellence Podcast. It is with great pleasure I have my friend Warren Shaeffer here with me. Most investors study companies from the outside. Today's guest, Warren, lives inside them at scale through failure, acquisition, reinvention, and return. Before becoming a partner at Pear VC, Warren built and sold multiple venture-backed platforms at the intersection of media, creators, and community. He co-founded Vidme, scaling it to 25 million monthly active users and billions of page views before its acquisition by Giphy. He later co-founded Knowable, a pioneering audio-first learning in bringing world-class experts to a new medium platform, which was eventually acquired by Medium, where he went on to lead product, corp dev, and business initiatives as a VP. Along the way, he's been an operator, a banker, PE associate, scout for Andreessen Horowitz, part of First Round's elite angel track as well. So you've really seen startups from every single angle that matters. Today, Warren helps founders navigate what most people never see, what actually compounds, what quietly breaks, and what survives market cycles. Warren, it is always a joy to be able to chat with you. Thanks for being on.
Thanks for having me on the show. Thank you for that nice, very kind introduction, Adam.
Yes, for sure. Well, it's true. And now I'm looking forward, though, to learning more and hearing what you have to say on some of these topics in different ways. So to kick it off, I ask everybody the same question. How do you define entrepreneurial excellence? Like, what does that mean? Number one, what does it mean? How do you define it? And two, do you view yourself as an excellent entrepreneur?
Wow. Okay. Great questions. I think about who embodies this. And the first person that comes to mind, and it is a little bit cliche, is Steve Jobs, right? And you think about this person who had a very clear view of what great technology could look like, pulled people in along to that vision, executed things that wouldn't have existed without him, and has built, what is now one of the most valuable companies in the world.
And how do you then apply that same mentality to yourself or things that you've done? Like, how do you define yourself as a 3-time founder? How do you yourself as an excellent entrepreneur?
I think I'm a work in progress, and I look at some of the entrepreneurs that I get to back as an investor now, and I think, wow, this person is actually more impressive than I am, or has some insight that I don't have, and that's what makes me really excited as an investor. I do think that together with my co-founder, we did some things that were very novel, that wouldn't have existed, that we really basically pulled the future forward creatively, and I'm proud of that.
What do you think gave you those insights to be that sort of founder who had a shot at doing something different and better in achieving at least some modicum of excellence?
Look, I think the best founders, they see the world as it could be more than as it is. And so they just have this idea of, they look at something and it feels broken to them. And they also combine that with high agency and an ability to go execute on the problem. So I've maybe been plagued or blessed with this ability to kind of see what's wrong in situations or in the world. And I think a lot of founders operate under that too.
So just actually to think through like what you just said and maybe break down each one of these pieces, right? You said essentially great entrepreneurs have a fantastic idea, can kind of see something that's broken and are bothered by it. They have agency to go give it a try and then are able to execute at a high level. Doing all three of those is really tough, right? And that's probably why there's very few truly great entrepreneurs. How would you break down each one of those pieces? Like what is defined as an idea? Like we all might have good ideas, but like my idea to like drink a blue drink today instead of just having water, which I mostly have, is not an idea that anyone's going to buy anything from. I mean, I spend a lot of money on this fancy, sugar water, but that's not what gives someone a truly unique idea and perspective. And how do you know as an entrepreneur that is truly unique versus all, you and I see lots of ideas that are kind of the same, right? There's a lot of companies all copying each other. What makes something truly unique and differentiated when you're like, oh, this is a chance of being something real?
Yeah, I think the clearest sign is that most people think it's a dumb idea. So some of the biggest companies start out looking like dumb ideas. And I think Airbnb is a really classic example, right? This idea that you're going to create a marketplace for people to go sleep on strangers' couches. That sounds almost foolish and dangerous. And that was the reaction for a lot of investors. A lot of great investors looked at Airbnb and passed on that investment. And it ended up being one of the best investments, early stage investments of all time for Sequoia and for Y Combinator too. So I think Or, I wear an Oura ring, right? If you would have pitched this as an idea and said, hey, I'm going to give you a device, you have to pay hundreds of dollars for it and a subscription, and I'm going to tell you if you slept badly, that sounds like a dumb idea too. I think, and so this is, we hear this term a lot in Silicon Valley, but this idea of being contrarian and right. And that's really what a great entrepreneur or an excellent entrepreneur is ultimately able to do.
Is there a way for an entrepreneur listening to this to know if they have an idea that is contrarian but has a likelihood of being right? Like, how do you really know?
I don't think you do. And I think this is what makes entrepreneurship so tricky, is that somebody has to just take the plunge and hear no 50 times and still believe that it's an interesting idea, and basically will something into existence that is maybe weird at first blush.
So when you think through yourself as like an investor,
yeah,
right, in putting that investor hat on, how do you think through those things, right? It's so easy. You're hearing, dozens of pitches a week, and if your job is to essentially to say no to 99% of them, how do you know, okay, this is an idea, and we'll obviously break down agency and execution as well, but like, how do you know this is an idea that, oh, this is fascinating to me and I want to learn more?
So this as an venture investor governed by the power law, right? And this idea that there are a few companies that become really big and drive 90+% of the returns for this weird asset class that we call venture capital. And so I'm looking for those ideas that I believe can truly be breakout if they are right. And that, at least on the idea level, is something that pretty much every venture investor is thinking about, is basically, if this goes right, how big might it be?
But even then, right, to your point, most investors whose job it is to see the contrarian ideas miss it. Airbnb, Uber, right? Everyone who saw Uber was like, oh, like, okay, there's a teeny tiny market for black cars. Who's going to really do that? That's not a real big idea.
Yeah.
And then it actually turns out the way to think of it is you're massively expanding the market. And suddenly, instead of just being able to get a black car to and from the airport, you can get a car anywhere you want, anywhere in the country at any time. And now car services are a market that's, 100x in size. Like, but most investors miss that.
Right.
And so like, what makes, maybe the other perspective is like, what makes an investor great at seeing those things? Is it just because, once again, people miss it?
It is a strange job. And to your point, we basically have to bet on, if this goes right, what might it be, rather than, I think the common mindset is like, oh, okay, well, will this work or not? And so there's a little bit of a question of, okay, could this actually expand the market? And that's when I think about and I focus on consumer investing. When I think about some of the biggest investments of all time, they are market creator companies. And Uber is expanded the market. Airbnb created the market of peer-to-peer real estate. Coinbase created the market for, basically banking with crypto. So I think about those and I lean into those ideas that maybe most investors, if they did a market analysis, would say there's no market here.
Okay, so that's the idea part. And I assume, do you think a lot of ideas, do they come from, where do ideas germinate from? Right. So you certainly have some founders who come from personal experience, they learned it, they saw it in school, whatever it is. And then you have other founders who are just multi-time founders, or you're a multi-time founder. So you've had 3 different ideas that are big enough that someone's willing to pay you some money to buy that idea from you. Where are the fonts of wisdom where those ideas sort of came from for you, for all 3 of your companies?
It's on second and mission. No, I don't know. I wish there was like one place that you could just go and get great ideas. I think the reality is
it probably is going to some sauna in San Francisco.
Right, yeah.
To get ideas.
It's like an appropriate blend of ions of this one place. I think it comes in all sorts of different ways, and there isn't one heuristic for finding a great idea. Some people, it comes to them in the shower based on some personal experience. Some people, they're very analytical and they look at the market and they see trends and can just extrapolate into the future. In general, though, that everyone needs to basically paint a vision of the future that could be true. That's I think the unifying component of the idea is there is some path to this version of the future where, hey, we have a marketplace for peer-to-peer drivers, or a marketplace for real estate where you can short-term rent your spot and make it feel viable.
Okay, so if you as an entrepreneur, you're starting out, you have an idea, you play that out into the future, you think, hey, I can see the future, this can be huge, obviously lots of things need to go right, but I can see this being a real thing. Then you mentioned agency, So walk through like the agency piece for someone to, and by that, do you mean like the guts to go try to go build this, essentially, to say like, I'm going to go take a shot? How do you define agency, and what does that look like then as an entrepreneur?
Yeah. So I think about this four quadrant chart, basically, where it's like some people can see problems and some people have agency, and those people become entrepreneurs. There's some people who can see problems but don't have any agency, and those are basically comedians, right? Like, hey, isn't it weird that this, I have to pay my CPA $1,000 to basically not tell me what taxes to avoid. Or then most people actually don't see problems and have no agency, right? So that's kind of like the regular people who go about their day to day.
Or I'd add, just, you also have like people who are almost bad employees who have lots of ideas, but basically they just complain all the time and they take no agency around any of it. And those are even worse. It's just like, I hate it when you tell me you're a problem. A rule we have at my company, Chores, we say, hey, we love ideas. We'd love you to come up with questions.
Yeah.
But like when you ask a question, you need to come up with, hey, here's my potential solution for it as well.
Yeah, I like that. I think that's the common classic adage of being a good employee is bring solutions, not problems.
Correct. Yep. So sorry, keep going about agencies. Okay. So
I think, the world sort of organizes itself into some spectrum of agency and ability to see problems. And the people who I think make great venture-backed founders are able to see problems and come up with really brilliant solutions for them. And I think about that as agency, and they can execute on those ideas or bring people along with them and inspire them and provide them with clarity of mission to actually go execute the solutions that they've dreamed up.
What is there a personality trait or something else that gives someone the ability to have agency? I think a lot of people listening might say, well, I would have agency if only I could afford to do it, or something like, and it's a monetary thing. I try to push back and say, no, it's not actually a monetary thing. And the Airbnb guys were selling cereal to try to make ends meet. And a part of the idea was like, we need to rent out our apartment because we're broke. And how do we rent our apartment out appropriately during these big events that came through San Francisco? Which led to their idea, essentially.
Yeah, I think it's basically they have a bias toward action and a real sense of urgency. And the phrase that I think about a lot is, does this person get shit done?
Yeah. How do you notice if someone gets shit done? Like, as an investor, how are you able to tell? Because lots of people can look great in a pitch.
Yeah.
And they might be terrible at actually the real agency. And we still need to talk about execution, but like the real agency part.
Yeah, great question. It's something I look for a lot, and I look at speed of execution even between meetings, right? So if I met you last week, what's changed? And the people who are ferocious executors and have that high agency, they get stuff done even in a matter of 24 hours. And especially now with Claude Code, I mean, you can spin up an MVP in a meeting. And I look for that. I look for those people who just cannot wait to bring their vision of the future forward.
Yep. No, I agree. It's something I also talk about with my team a lot. It's like, look, it's funny. We just changed one of our we have sort of three key cultural items at Shore, and we changed one to essentially to action is what it's the underlying term. It's just action. We wanted to have it to be a sense of urgency, but my leadership team thought that was too negative sounding. Yeah, so just we've changed it to just action, but the same idea is there. It's like you need to have this sort of bias to execute, to action, to get things done in a sense of urgency, because there's no time to wait in today's world. And too many founders spend too much time. I think they fail because they lack sort of that real agency to get things done fast, or that sense of urgency. Like, all founders move quickly, but the ones who really succeed move faster than everyone else.
I think that's right. And I think speed is, especially in a market that's changing really fast, speed and agility matter more than ever.
So I want to I've talked about that too, with like when it comes to strategy. But let's talk about execution. It's funny. I was on a podcast myself yesterday, and he was asking questions about how I talk about how I think execution is far more important than strategy. But how do you define execution? And then once again, like, what did you as an entrepreneur, how did you execute quickly? Like, what did the outcomes look like for execution?
Yeah. So in terms of how do you execute quickly, there's two dimensions, right? Velocity is speed and the direction. And so ideally you have a lot of speed in the right direction. So the way I think about it for a founder is you're basically a scientist. You have a hypothesis. I think that people, if we created a marketplace for shared car services, people would use them. And then you need to test that and validate or invalidate it as fast as possible. And the way you do that is you ship an MVP ideally really fast, or some variation of customer feedback interviews, et cetera. But the best teams are able to just spin up a lightweight version of products and test a very specific hypothesis.
So is that something you felt like you and your teams that you built were really good at doing? It's just like really, really quick. Like forget, obviously, all the stuff you did was before all the AI stuff, really. But like you were still able to spin things up really fast. How did you imbue that mindset, or how did you hire people who executed at that level? Like what did you do to make sure you built a team like that and or create the culture that embodied that mindset?
I think it's really hard to take somebody and change their wiring. I think you just have to find people who are intrinsically wired to want to ship things quickly and have that sense of, let me just put something out into the world and see what happens, and rather than think through it. So I was just really lucky to have teammates who were amazing at shipping things fast and being comfortable with throwing something away if our hypothesis around it wasn't validated.
Okay. Were there any questions you asked then to like hire people like that and to find those people?
I think actually references are really valuable for this. So you basically just say, what did they actually get done? Like specifically, not did you like working with them, were they well regarded? It's tell me about what they actually changed and what impact did they have at the place they were at last. And then I think some of this too is just a feeling, right? There's that person who will be like, oh, I'll get you this answer or this assignment back to you in 2 weeks, and then somebody else is like, here, I just whipped up my version of it during the meeting. Like I think it's at the startup stage, you really want that person who just has that bias for action.
Now, do you think so how does that play out too? I think sometimes people over index on a piece here. So sometimes what happens, I feel like some people are really good at responding to emails right away.
As an example.
And I'm always worried. I'm like, wait, if you're so fast responding to email, what are you not doing? Like, it's also impressive. I'm like, oh, wow, you got back to me so fast with a thoughtful answer. But do you have time for all the other things? And the answer might be yes. Like, I don't know how Elon Musk runs 3 different companies or 5 different companies and has 15 kids and tweets nonstop. Like, forget his politics for a second. That's really impressive. Like, I don't know how he does it.
Yeah, agreed. I mean, how do you think? He probably delegates. He probably just does things over text and has people who can do things for him.
Yeah. So on the note, how do you look for that as an investor? How do you look for those executors? Is it because do you do the same sort of reference checks, or you ask them like, what did they really build last time? Or how are they showcasing what they're getting done in the speed of that execution?
Yeah, I'm a product guy, so I love to just see what you've built. So I'll just say, what have you built? You have this idea. Have you mocked it up in Figma? Is there a prototype? Have you done anything with Claude? Like, that's for me a way to see, have they actually done anything to date? And then I will try to track, if I can, how that changes over a short period of time. And so Mark Suster, an investor at Upfront Ventures, has this classic line of you kind of look for lines, not dots. You're looking for how somebody's product trajectory changes over a short period of time. And that's indicative of the slope and their sort of way of being.
Yeah. And obviously all the other pieces need to fit together too. Given today's world, right? I don't want to spend too much, AI is about everything right now, but I don't want to spend too much time on that just yet. At least given, as you mentioned, the speed at which, or the ease of which it now is, people are able to create things. I assume you're looking for people who, no one can come into your office and not show you a full like live demo. Like that would be an embarrassment.
It is weird to me today when somebody comes in and they haven't tried anything. And I think that is at least a yellow flag, especially in the consumer side where you really need to kind of just test things to figure out if it's going to work or not.
Yeah. What have there been good excuses for why people haven't done that?
None of them are good.
Yeah. Okay. That's kind of what I thought. It just, to me, it makes no sense. There is no excuse anymore to not have good prototypes that you're spinning up essentially on a daily basis and have just an incredibly fast iteration cycle. The thing that is holding people back, or essentially what's missing, I think, for a lot of people, is actually the ability to have good ideas and build those out. It's not the idea anymore. It's not the ability to build the product. The challenge is to actually think like thoughtfully about what that product looks like, is my thesis.
Yeah, I think it's a combination of things, right? It's what's the idea? How quickly can you execute? And then is that idea defensible too, long term?
Right. Well, that goes to the idea part, right? So sort of like, do you have a great idea that actually can be defensible, can be big, can be huge? Then it goes to agency. Do you have someone who actually can like go ahead, try to go build it, get the right team around them, all those other things, and then executing, doing all those pieces and actually like being fast about doing it. On the execution front, one last question, then we'll move off of this a bit. But like, what are other qualities that make someone a great executor? Like, it's one thing, okay, get your product off the board, get it built, right? But like, there's so many other key pieces that I see founders fail at, where they're not good executors, like they're not good delegators. They don't know how to actually execute on like the business piece. And even when they might have a good idea for the product, they're not even great at product execution. Like maybe they might have all the other pieces, but like there's something that's missing. Like maybe, I would imagine that like Mark Zuckerberg or something, right? The idea for Facebook was obviously great. He had the agency to go try to do it. Timing was great. All the things were aligned, but he also executed pretty damn well and grabbed that opportunity when it was there, because there was lots of competitors too. That, and I imagine like Travis Kalanick is the same way. It's like certain types of founders clearly are able to execute on all elements. Is there like a character component? Like, okay, well, this person has the maturity level or thoughtfulness, or just like they're so hardcore about it, like whatever it is to get it done, like to like really want to execute on all sides of the ball, the product, the sales, the go-to-market.
At least in the consumer world, often I see that founders who just shoot first and ask questions later win. So Mark Zuckerberg didn't go with a pitch deck to Sand Hill Road and say, here's my big vision for the social network of the future. He just built a thing that was fun. I was at Harvard when it launched. It was really viral. It was a beautiful product. It clearly tapped into something that the world wanted. And that was the opening salvo. So he just did it. He didn't talk about it. He just did it.
So actually, it's a great segue to the next thing I want to talk to you about. So going back in your history a little bit to learn more about you, do you regret in any way not saying, screw it, I'm done with school and I'm going to go work for Mark. I'm going to go move to Silicon Valley and go straight work for Mark the moment I graduate and do that, since you were there at the ground floor? And to be clear, I was in my senior year of college in Vanderbilt. We got Facebook my senior year, one of the first colleges that got it. I took the same path and went to grad school. I should have said, I'm going to go to Silicon Valley and like just knock on the door, figure out where Facebook is, knock on the door and just sit there until they say like, here's something you can do. And, I'd be a multimillionaire now or something. Like, do you regret that at all?
I mean, I'm generally a believer of like not spending too much time regretting, but I do think the advice that I would give somebody today is that actually not taking risks is a risk. I'm first generation. I had student debt. My parents are, immigrants. And I think there's sort of that kind of like immigrant path of go do the safe thing. My mom wanted me to go to law school, right? And I think that sometimes it's actually risky if you do the safe thing, because you're going to miss out on great opportunities. And, Eduardo was actually, I knew him socially. I mean, there were for sure.
Eduardo being one of Mark's co-founders, right?
One of his co-founders. Yeah, I didn't know Mark. I knew Eduardo. I knew Chris. And I think, obviously, in retrospect, it would have been an amazing experience to go be in the early days at Facebook. And it's something I think about a lot now as an investor and as a builder too, is there are just some times when you see a product and the time to magic is so low, where you basically feel this emotional experience using a product and you think, wow, this is incredible. And I had that feeling with Facebook. I had that feeling when Uber launched, when Tinder launched, when OpenAI launched ChatGPT, right? Like those are the things that you look for. And I think the lesson I would give my younger self or younger listeners is be on the lookout for those kinds of products, because those can quickly grow to become generational products and companies.
So I totally agree on a number of those points. One, I will say one of my favorite quotes that I don't even know who it's attributed. I've searched for it. There's no real attribution, so I'll take some attribution to myself, I suppose. But like the greatest risk is not taking one. So like the greatest risk you ever have in life is actually not taking that risk. People think that's not the case, but yet the world is a really safe place. Like it's, especially when you're young, you don't have, what is the worst that's going to happen? You might go bankrupt. Like that sucks. That wouldn't be ideal, but like you're not going to go hungry in America today if you go bankrupt. Like you will have somebody who puts a roof over your head, especially if you're a good founder. Someone will be like, yeah, dude, come hack my house. And so you get back on your feet. Like there's a million options. So the risk, it's so low to take a risk. Now, if you really think about it, everyone should take the risk.
I would say it's probably more nuanced based on every person has a different risk profile. So there's, some people shouldn't go climb for Alex Honnold to go climb the Taipei Tower, it just wasn't that big of a risk for him, but it'd be a much bigger risk for somebody else. So you just have to calibrate based on what your skills and aptitudes are for the thing that you're considering. And that's what changes your profile.
Yes, but I'll disagree slightly with you there. I do think that for most people, especially when you're younger, but even when you're older, the overall risk profile, if you believe you have a really good idea, and you believe you have the agency to go do it, like you have the ability to go do it, and you know how to execute, which are things not everyone can do by a long shot, you will regret not taking that risk. I kind of feel strongly about that. You will regret not taking your shot.
Yeah. So it's again, it's if you know what you want to do, you feel like you have the skills. I do think regret minimization is a really useful framework for making decisions.
Yeah.
Will I regret not trying this on my deathbed? And usually the answer is if you have the urge to go try something and you don't do it, then yeah, you might regret it.
Correct. And it's funny, and speaking of the investment side of it, I recently wrote a post that I've not published yet, but about deals that I feel like I missed out on personally.
Okay.
And largely it aligns with what you just said, which is if you're into something that's exciting and you think this is cool and interesting, you want to go do more with it.
Yeah.
You should obviously take a swing at trying to be more involved with it in various ways as an investor or go work there or whatever it is. And one of my examples in my document was Polymarket. I remember Polymarket and I was like, this is freaking awesome.
Yeah.
And I was like, but Americans couldn't really use it because it was basically blocked for Americans to invest on it. So it's just like looking at their website. Man, if I were a professional investor, I should have like gone after, like, I want to find a way to invest in you. Like this is clearly, to me, it was so obvious, but I didn't pursue it. And I have a number of examples like that in my life where I missed out. I mean, you mentioned like OpenAI. It's like, okay, well, that was obvious to you, but did you invest?
No.
I was looking recently as I recently actually invested in Anthropic, but it's, at a huge valuation. And I look back at my emails and the first email I got about being able to do an SPV into Anthropic was where they had a 5 billion valuation.
Yep.
Right? They're at 350 billion now. It was obvious to me then it should have been, and yet I completely passed and whiffed. So it's those sorts of things that I do wonder, even as someone who does this a lot and have made some good bets, like where I've missed out on. But okay, so I want to talk to you about going back in time. Tell me more. I actually did not know your family was an immigrant first generation family. Where did your parents come from? How did you get to become the person that you are today? Like where did all that come from?
Yeah. Well, my parents immigrated to the States from Romania, which was a communist country at the time. They landed in the early 80s and somehow ended up in Southern California and Newport Beach, which is, I think, one of the more affluent.
I was going to say, it sounds like they made a good choice. It's like, we're leaving Romania and we're going to go to the beach in California.
Part of the OC, yeah. My dad was an electrical engineer and worked in consumer electronics for a company in Southern California. And, I think we were basically like the poorest people in Newport Beach. And I think that really gave me both an insider and outsider view on the American economy and the economy in general. I think we're all kind of shaped by our genetics and upbringings. I think the fact that they left a communist country in pursuit of more opportunities has shaped a lot of how I think about what I do and find meaning in the work that I do. Because I do think that capitalism has certainly lots of flaws, but it seems to be the best of the worst options for how to run a society. So I like, backing ambitious people who are working on world positive ideas that can also make money.
Do you think that this is a thesis I've been bandying about, and certainly other people have as well? Do you think founders need to have some sort of chip on their shoulder? Like, in other words, like, do you think you being the founder who founded 3 companies, 3 exits, was part of that predicated on some level of, I'm going to project here, but like you feel like a bit of an outsider who your family didn't have as much money as everyone else, and clearly like something maybe pushed you to do more and make sure you excelled at school, and when it got into Harvard, and then one thing led to the next?
Yeah, I mean, I think I've been ambitious since I was young, and I think the part of that is just a lot of first generation or immigrants have that kind of hunger to excel and to prove themselves. But I don't think every founder has to have the exact same story, and so I don't know that Mark Zuckerberg had a huge chip on his shoulder. I think he was just a really good builder and wanted to build something that he thought was cool, and he did.
Yeah, there are examples like Mark Zuckerberg and a few other people who are like that, but I also do wonder sometimes if the average great entrepreneur has some sort of chip on their shoulder from something in their upbringing or growing up, things like that. So then after college, you go to Harvard, you go into investment banking and private equity, basically. Like you take the very safe path, it sounds like.
Yeah, I did. I took the safe path and worked at JP Morgan in New York and investment banking. And this was around the time of the credit crisis. And I actually got a job to join a private equity firm in San Francisco. And at the time,
Credit crisis being like 2008.
2008, yeah. And at the time, so basically that meant to borrow funds was really expensive, right? If you wanted to borrow money, and a lot of private equity is built on borrowing money to buy a company, right? So it's you're levering up the purchase. And so actually the founders of the fund realized, hey, we should just take the other trade and start buying debt. And it's really easy. We all hear this adage of be fearful when others are greedy and be greedy when others are fearful. It's really easy to say that and nod and say, of course. It's actually really hard to do in practice. If a crowd is running one way, it's so hard to run in the opposite direction. And kudos to these managing directors like Golden Gate who basically had the courage to say, hey, we see an opportunity here. Everybody's running away from debt. Let's go run, buy debt. And I got tapped to help them build a credit fund, and we deployed over $1 billion over 2 years. I think it's probably one of the best performing credit funds of all time, and really reinforced this idea of opportunities emerge when you take a bet that is different from the crowd, and you are right. So obviously that second part is important.
Right. I mean, I'm sure that fund in those investors have also been wrong a lot of the time, right? Hopefully right more often than not, but like they've been wrong plenty too.
I'm sure there's, instances of investments that weren't the right call, but I think overall good investors are right more than they're wrong.
Do you think there's a level, what makes those good investors different? Is it because they are smarter? Is it because they have a higher risk profile? Like, you and I are both investors as well. And like, I would say, it's funny you made that example. Part of that post I mentioned, one of the things I missed, like I totally saw COVID coming. I literally was telling all my friends, all these other things, like it's happening. This is real. This is not, we all read about it, but no one really believed it. I built up a bunch of cash. Day the market was the lowest it was the entire time during COVID I bought, timed it perfectly. And I chickened out. I bought a small amount of equities and I bought the rest. I spent the rest on bonds. I was scared.
But that's exactly my point, right? It's like, of course, it's so easy to say, be greedy. Everybody's fearful, be greedy. It's actually just really hard because you never know if you're at bottom or if it could keep hailing down. And I think great investors do have a sense of when it's actually an opportunity and when it's actually not.
Yeah. So okay. So you did that. What made you decide to leave what clearly sounds like a budding, really good finance job?
Yeah. I was well paid. I was good at it. I enjoyed it. But going to this point that we talked about earlier, I actually had the realization of, if I don't, I had this urge to go be an entrepreneur. I, had kind of the classic lemonade stand experience as a kid and just really felt the call of being a founder. I realized if I don't leave, it'll become harder and harder. My opportunity cost is just going to continue to go up. And now, before I have kids or a mortgage or anything like that, now is the time for me to go take quote unquote a risk by seeing if I'm any good as a founder. So I put a notice and I thought, hey, if it doesn't work out, I could come back to finance or go to business school or something like that. But this is the window, and I had saved money up, and it felt like the right time to do it.
Do you think being in San Francisco at the time helped you feel that way, or would it have happened no matter if you were in New York too?
I was so envious of all the stuff happening in San Francisco, and I just had, that was definitely part of it. I actually went to LA to be closer to family. And I think in retrospect, again, like advice is, if you want to be an actor, go to Hollywood. If you want to be in finance, go to, late stage finance, go to New York. And if you want to be in tech, San Francisco is just the place to be early in your career. LA was a great place too. A lot of my closest friends, are from LA, but I think there is just a different mindset around tech in the Bay versus San Francisco. But still went through an accelerator down there called Mucker. Yeah, just fell in love with being a founder. And
why? So then why consumer? Like, what got you into thinking I'm going to build a consumer company? Because if basically was the direction you went from finance to building consumer, they don't seem related at all.
Again, this is just how I am wired. I like the idea of building things for people, and I like the idea of doing things that feel world positive. And it's just harder for me to be as excited about B2B SaaS as it is about, coming up with a new consumer experience.
But then how did you come up with a consumer? Walk me through the first idea. You're like, okay, quit finance. I'm going to go into an accelerator and just hope I get a spark of genius. Like what happened?
No, went in with an idea and there's sort of been this evolution of hot phrases in tech, but at the time, big data was kind of like the cutting edge thing. And I was like, oh, the internet's putting out all this data. Maybe it's going to be useful someday. Worked on a recommendation engine. And the idea was that we could actually look um, at Yelp data and basically just figure out, okay, if there's a restaurant in San Francisco that you like, what's basically the analog of that restaurant wherever you are in the world? And just do vector analysis based on comments and ratings and give you more of a personalized Yelp experience. And what we kind of realized, fortunately, pretty soon was like, oh shit, this is a feature for Yelp. This is not enough of a company idea. And so we should kind of work on something different. And then went through the whole idea maze and worked on it, thought about a bunch of different ideas. Ended up partnering up with a different co-founder and ran this company that was making software for people to create their own social networks, people and companies. It was a social engine, largely bootstrapped. Ended up getting a couple offers to sell the company and sold it to a marketing agency that had some big enterprise clients that they were wanting to upsell the software to. And it was a great outcome for us and gave us capital to go work on a new idea.
What do you think you did when you went into social engine?
Yeah.
What do you think you did right to execute to get it to the place where people wanted to acquire? Because lots of people start companies.
Yeah.
Even fewer of those, like one thing, like you and I know the stats, and so do our listeners. Most companies fail. So having an exit of any sort is really a win, especially when they had a good outcome. What did you do to get social engine? Because you weren't at social engine very long before the exit.
Yeah. My co-founder Alex had started it. And he brought me in to basically help grow it and selling it. We actually just ended up making the whole economics of the business more profitable. So we launched a SaaS version of the product, which had clearly very good retention and we think increased the LTV of the customers. We also kind of rationalized some of the costs and just made the whole operation run more efficiently. And so that made it really attractive because we were profitable, we were growing, and in a category that, has proven to be somewhat durable in terms of people wanting to have their own communities, and ran a process too. So I think there was some benefits of having worked in finance of, hey, I could build a financial forecast and knew how to speak basically the language of business people, of terms, and come to a situation where we ended up having multiple bidders and being able to find a good market value for what we built.
And before we get to some of the other acquisitions, companies you sold and those companies, I kind of want to ask a macro question about that in general. Like, why sell? Like, why sell at that time? Why sell the other companies? What is the overriding decision point and framework?
Yeah, we really wanted to take a swing at something, at a bigger idea. And we just felt like there was just so much. We just really thought we could build something that the whole world would want to use. And we didn't think Social Engine was differentiated enough. But it was too profitable to just kind of shut it down and neglect. So it made sense for us to find a new home for it and work on a mission that just excited us more. So we built a product lab to test different ideas. And one of the first things that we built was Vidme, was basically a really simple tool to upload videos. And this was in 2014, before there was native video on Facebook or Instagram or Snapchat or Twitter. Like, none of these platforms had video. It's hard to remember, but it was just text and photos. Well, it just took off. We put it on a Reddit and it just started growing 10% week over week organically.
You guys are like, oh my gosh, like this is going crazy.
Totally. It was wild. It was just a true holy shit moment.
And okay, so that happened. And how many people, was it just you and like your co-founder?
Yeah, so we kept some of the team from Social Engine, funded this new product lab, and put out Vidme or the first version of it. And that was in early 2014. We worked right off the sale. We sold Social Engine at the very beginning of 2014, launched Vidme shortly thereafter, and there were 4 people on that core team. And then
the Social Engine team didn't try to keep you on board?
We had some consulting arrangement, so we did some advisory, but tried to spend as little time doing that as possible.
Yeah. Wow. Okay. And you're just like, hey, this is an idea. You're just cranking out ideas. This one seems interesting. Let's get it out into the world. So your point about like execution agency, it's like execute, get it out, get people trying it, and boom, it just like clearly where there was interest and this took off.
Exactly. Yeah. I mean, and this is why I get frustrated when I see somebody come in to pitch me now that I'm an investor and they're like, I haven't built anything yet. I'm just like, why? Why would you? So like have some capital to get to play with. But still today, I think there's less excuses because it just doesn't cost that much to build something to demonstrate that you have that ability to execute.
Yeah, I mean, like I'm shocked you let them in the door, right? If I almost feel like if I were a professional investor, I'd be like, look, can't wait to meet you, but I'm not. But first, send me a demo of your product.
Yeah.
Right?
I invest at the pre-seed stage. So sometimes there's just people who you're just like, wow, this person is so incredible. And like, they're literally still at their job, but I want to fund them now. Right.
But even then, on the weekends, they should be building something and have something to show. Like once again, you can build something in an hour nowadays. Like it's not hard.
Yeah.
So, anyways, you're obviously better. You're a professional VC, so you're better at this stuff than I am. But like that would be my take. But okay, so Vidme, it's taking off. It's going insane. What then? You take on funding. You're like, we need funding to like keep these servers running and not melting down. Like what's going on?
Yeah. So then we're like, oh shit, this is going to cost us a lot of money to serve all these videos. And investors actually came inbound to us, and we ended up raising a $3.1 million round, and had some great investors, including Mark Suster at Upfront and Alexis Ohanian, the co-founder of Reddit, Mucker, SV Angel, and at the time that was a lot of money. That was a really big first round, and part of the thesis was, well, this will give us a moat because other startups won't be able to raise so much and pay for the cost of video. Video at the time was really expensive. It was kind of like, and actually part of our pitch when we said, hey, here's why we want to raise venture funding is we saw that the cost of hosting video was going to come down. And so we said, hey, we're skating to where the puck is going. So this is kind of, we're being, short-term generous, but long-term greedy.
Yep. Smart. Okay. So then raise the money and then what happened, right? Because you sold it 4 years later. So like kind of you still basically spent 4 years doing it, sold it 4 years later. You were the first in the space, growing massively. Yeah. What didn't go quite right? Like, not that it totally failed, but what didn't go quite right?
Yeah. So we just kept growing organically, and we realized, okay, we need to, if we're really going to make good on this mission of being the world's most creator-friendly platform, we're going to have to get monetization figured out. So we actually ended up just kept growing the product, kept improving the product, built a mobile app. And then in 2015, we raised a Series A, led by NEA, and started working on monetization. And we thought, like, okay, if we're going to compete with YouTube, we're going to need to build economics into the system long term. And so we started running ads, and we were making 6 figures revenue a month. And then we kind of realized, like, oh, we're actually not going to beat YouTube at ads because they have so much power. And then we introduced, so kind of necessity is the mother of invention, we introduced subscriptions and direct tipping. We were the first platform to do that, to my knowledge. And but the numbers it was growing, but they were small. And we thought, like, oh man, is this going to be enough? Like, is this model going to actually be a big market? And now, obviously, the answer is yes. We know that the creator economy is huge. But at the time, it wasn't clear. And it was like, oh, well, how many people are going to tip a video creator when you don't have to? I think the other change in the market was that we learned that Reddit was going to do native video. And we're like, okay, so much of our distribution right now is coming from Reddit. Do we have enough escape velocity to really become a standalone platform or not? And in retrospect, I wish we just kept going. We raised another round and we're way more aggressive because we were basically TikTok before TikTok. We were interest-based video graph. And I think we, had a shot at actually making good on our mission, which was to be one of the most creator-friendly platforms in the world. Ended up thinking, you know what, maybe we have a different idea. Maybe we should go work on a different idea. And at the time, like, a friend had started this company, Goat, which was a pivot from like a totally different idea. And they just had raised a big Series A. And we thought, oh, it'll be easy. We'll just do it again. And in retrospect, and part of, I think, what has driven me to be an investor is I really think we could have been more thoughtful around that decision and been more deliberate. It's hard, though, when you're in the fog of a startup. Bill to AWS was $250,000 a month at the time. So we were burning as like cash to support tens of millions of unique visitors a month. And I think this is around the time that we met, Adam. You and I met, right? Because you were working for a YC startup.
Correct. We were a machine learning personalization algorithm,
right,
to personalize things, and we were like, we need to talk to all the big video players because, like, co-founder was the guy who basically built YouTube's personalization algorithm. Right. So let's go help all these other companies trying to do this, and that's a whole different discussion about why that company we exited as well, but like it didn't achieve the grand ambitions that we had for it. So so in retrospect, is your advice to founders nowadays saying like, hey, like if you have something that's working and you feel confident about it, keep going. Like the money will be there almost no matter what, the money will be there. I mean, it's if not, the problem is you can make the argument the other side, which is like there's plenty of founders who VCs always push them to like, keep going. Because the VCs are incentivized to have that massive exit. And the VCs don't care if you fail. Whereas for you as a founder, if you can get a really good exit and it took you only 4 years to do it, that's better than waiting another 10. Like you could still be on this journey of running Vidme today, let's say, maybe not nowadays, but like you might have been, it could have been another 10 years for you. And you might have been running a multi-billion-dollar company, or you could have been like, crap, we still lost to YouTube or to TikTok, right? Like, and you would have had nothing. Because at some point the VCs won't keep funding you if your competitors grow faster, execute better, whatever it is. So like, what is your advice from like the investor standpoint and then also like the founder standpoint, like when or if you should sell?
Yeah, it's such a personal decision for a founder. I think the reality is there is a nuance. There's, as humans, we like to kind of like boil things down to two options. And the reality is there's at least three and probably a lot more. So I think there's a world where we could have said, oh, you can take secondaries and get an investor who believes in your vision and is kind of helping you de-risk a little bit if that's kind of the holdback. And I think that's an option. That's kind of an avenue that we didn't really think through probably hard enough. Is, hey, yeah, there's a lot of risk, but oh my God, if we win this market, it's so big, or even a portion of this market, it's such a big outcome. And I think had we been in San Francisco, actually, we probably would have made a different,
because of the level of ambition of founders here.
Yes, different. Yeah, I think so. And just the level of capital too, and this like the willingness to take that if this goes right bets versus how might this not work, right? So I think we just got caught up a little bit on the monetization and we're monetizing, but is it growing fast enough? Can it be big enough? And that piece, we really got caught up there instead of thinking about, oh, we should just continue to focus on growth because this is a network effect business. We know that people spend a lot of time watching video. We believe in this transition from analog TV to digital video, and I mean, it's obviously things worked out fine, but I now, knowing what I know now, and if I see founders in that situation, and as an investor at Pear, like part of the funnest part of the job and the most rewarding part of the job is actually being able to help a founder increase their odds of success and actually say, hey, I've lived this experience. You have something that's working. Now is the time to be aggressive. Here's why. Or, hey, this, I'm looking at it from the outside and this really doesn't look like it's working. Maybe it's time to think about something different.
Yeah. And those are hard discussions to have. I mean, in when you then sold Vidme, so you sold it to Giphy, like why Giphy? How did you choose that? And like, how did you feel about that afterwards? Like, was it sort of like, hey, like a celebration? Like we took some money we in Social Engine, we put that into this new company called Vidme that took off, built something that like people know about, which is a big deal. And then exit for a good amount. Like that's a success. Like,
yeah, it wasn't the outcome we set out for, but it felt like that was the call that we made. It felt like, okay, to your point of why Giphy, we knew the CEO. We had actually I had spent time collaborating with him on how to lower CDN costs and things like that, because they also had a lot of traffic, and it was a very simple, very aligned mission. And they, made us an offer that we thought made sense and freed us up to go work on some other ideas that we thought were also like potentially even bigger. And so there was also just the opportunity cost of our time of, okay, on a basis, do we think this is the right call or not?
Yeah, no, and look, that's a question I think a lot of founders need to ask themselves too, is once again, do you want to sign up for that 10 to 15 year journey if you have an opportunity to exit? And are there other ideas you enjoy more? And then the time value of that money too, right? So if you got cash in 2018 versus waiting to get cash in 2024, which is better? I want to talk about like company building and like all those pieces too, but when we finish your overall arc of things.
Sure.
So then you go do that, you then go straight and start a new company. Is that pretty much right away?
Yeah, pretty much. We actually started a digital art marketplace that was all backed by Ethereum tokens. And so it's called Digital Objects. And we were selling thousands of dollars of digital art, and it was wild. And we were like, oh, we're 10 years too early. This is this is going to be a thing, but we're early by a decade. And then we worked out a different idea called Knowable, which is an audio first learning platform, which is also a good idea. But I think probably not.
Way bigger. What OpenSea became like worth 21 billion or something like that at one point.
Totally. Yeah. So at some point I was like, step forward. I'm like, oh, I'm really good at identifying things that could be very big.
I mean, I hope you all held all your ETH instead. That still would have turned out all right.
There have been moments where we have to like go back and figure out how to unlock our token art.
Okay, so fine. You have this great idea for a crypto thing. You then start Knowable.
Mm-hmm.
How did you get those ideas? Or was once again just like you're in a market, like, hey, this is like a cool thing I want to see exist?
Yeah, so a small team. We knew we all liked working together, and we just sit on the way forward and just come up with ideas. And it was like, what do we think? What are personal problems? What are problems? What are problems of other people that we want to solve? What's changing in the world? What's going to be interesting? What do we believe that other people don't believe? So just kind of running through the idea maze systematically, and just Knowable came out of kind of a common interest of us realizing, hey, we love learning. We believe that audio is really powerful. Like podcasts were starting to become more popular in 2018, 2019, and AirPods had just kind of really started to get traction, and we realized that listening time was expanding. So we thought, okay, this is an interesting expanding market. Isn't it weird that there's all these platforms to learn in a structured way on video, but none over audio? And that was really the realization that led to Knowable. And it was like, we want this product personally. Let's test. We ran ads to see if people would pay for audio courses instead of video courses. And half people said like they actually prefer audio courses. The number one reason that people say they listen to podcasts is to learn new things. And yet there was no place for structured learning in audio, and so we built Knowable to be that place.
You did that for 3 years. So you raised money. You probably right away got investors.
Yeah, it was interesting actually. So we were just kind of testing it and talking to people around it, and then an investor from Andreessen Horowitz reached out proactively. Was like, "Hey, I heard you're working on an audio thing," and at the time I was like, "Oh, Andreessen Horowitz, great." And that investor was Connie Chan, and she actually had a thesis around audio and learning, and this was actually already popular in China. And her thesis was so aligned with our thesis, and it was just a very clear kind of match, investor-founder match. And Andreessen Horowitz led around for us for Knowable. Yeah,
that's awesome. And then 3 years later, you sell it.
Yeah. So we'd raised basically just that first round of capital, built up a library of content, had amazing people make audio courses, including Alexis Ohanian, did a course on launching a startup. Scott Kelly, the astronaut who's been in space the longest, did a course on leadership. Chris Paul, NBA All-Star, did a course on healthy eating and high performance. And we started building this marketplace. And what we realized was, hey, we're making money, it's growing. We have thousands of happy subscribers, retention is good, but we didn't really crack growth. Like the cost of acquiring customers versus the LTV, wasn't a clear runaway hit. And we were thinking about raising our next round and got introduced to Ev Williams, who was the co-founder of Twitter and also the co-founder of Medium, and realized that, hey, they need audio. Like there's such a big opportunity for them to be multimodal rather than just text, and we need distribution. And so this is a really interesting complementary fit. And so kind of hit it off, and have made us a strong offer, and we were excited to take it.
It was that sort. So one thing though, it came down to saying, hey, we're not sure if the future is what we expect it to be. Therefore, it's better to take the exit now.
Yeah, I think we didn't feel like we were going to have a true IPO type outcome with Knowable. And I think that was it was that was probably the clear call versus Vidme, which I think, could have gone the other way. I think Knowable, it was clear, like, hey, and I think we look at Masterclass too, which has also sort of struggled with, there's no organic growth in this kind of learning market. And it's really tough. It's just
your class where you kind of graduate in a sense to right. They take a course, they're sort of done. Maybe they come back, maybe they don't.
Yeah, I mean, we had a subscription offering, and the retention was good, but it wasn't what felt tricky. And maybe we were kind of biased by our Vidme experience. That Vidme grew organically. We spent $0 on marketing. It was self-perpetuated, and I think we didn't have that same muscle built into the product on Knowable, or we didn't have those same dynamics built in on Knowable, and we didn't have the muscle of just being like paid acquisition down to the point where we felt like it was going to hit escape velocities and a path to a public company.
Are there lessons learned from Knowable, like compared to Vidme, that you're like, hey, like this is what to be a great consumer platform or play, you need to have certain elements, and like in retrospect, you wouldn't have started Knowable had you thought through those items?
Oh, look, I'm glad that we fared noble, and it was still a good outcome for investors and the team, and the product lived on until very recently, sadly. But 7 figures of revenue, and like it was a company, and it changed life. Like people still come up to me like, "Hey, I listened to your Knowable class on like how to buy a house, and I bought a house based on the advice that I learned in it." So there were real outcomes that are positive. I think the lesson from a venture perspective, though, is build growth, especially for consumer, build growth into the DNA of your product.
Yeah.
It makes
like a showing product clearer, basically, right?
it's so much easier. Or you have to have an LTV that's high enough to where you can really do paid well. And so sometimes I see these kind of like consumer subscription offerings that's like, hey, it's $50 a year. Those are really, really hard to make work because you're battling churn and you have to spend money to acquire customers if there's no growth organically.
Yeah. So thinking through all those 3 companies, what are some like leadership lessons you took away? What did you do? What do you think you did that you'd want to emulate again? Or what mistake? Let's start with maybe mistakes you made as a leader, from hiring to delegating to just building the team and product, like all the pieces, and then things you think you did really well that you would emulate again if you build your next company.
Great question. What comes up for me is the best thing that a great leader does is just hire great people and like gets out of their way. I mean, I was really lucky to work with just super talented people who were self-motivated, who had high standards, who were creative, who were kind, transparent. And so I feel really lucky about the people that I got to work with across these different companies. Being transparent is really valuable and powerful. And, big companies can't really do this as easily. And this is an advantage that startups have, is you can just be transparent. You can say, here's what I'm thinking. Here's why I'm thinking it. I may be wrong, but here's why I think I'm right. And it's easier to have honest conversations when you have a small company. And I think you're bringing people along on the mission is really powerful. Having a clear North Star is so helpful to a company because it helps people become more autonomous, right? If your mission is like, we want to help entrepreneurs become more self-empowered, like it's easier for somebody to think through what they should do when they're trying to come up with a solution for you. For us, for Vidme, was we want to build the world's most creator-friendly video platform. And we thought really deeply about how we can actually help creators. For Knowable, we wanted to build the world's first audio-first learning platform, and we did it. So like there were having a clear direction makes your job and your team's jobs much easier.
Is there a reason you think founders fail to do that the right way? Like, because it happens a lot where founders don't have that clarified. Is it because they have shiny object syndrome? Is it because they don't really know what they're building, even if they have investors who come in? Like, where do founders mess that up?
Good question. I think in multiple ways. I think one component might be that they actually just don't dream big enough. They're like, the vision just isn't that inspiring, or it doesn't connect on an emotional level. And so I actually got this advice from somebody that your company vision should be so good that people would want to wear it on their shirt. I was like, oh, that's a good hearsay. And I think Elon Musk does this so well. He doesn't say like, we want to build the leading enterprise space company. It's like, we want to go to Mars. I want to put humans on Mars.
Yep.
What a difference of an emotional feeling that you get as an employee or a customer versus, you look at Boeing's mission statement, like it's self-centered. It's not inspiring.
Yeah, no, that's so true. And then what about like hiring? Like, how did you make sure you hired great people? Like, that is a key thing.
Yeah.
How did you really hire great people? And I'm sure you messed that up a bunch of times. Like, where did you mess up with your hires?
Yeah, this is something that everyone talks about, right? Is hire A players. Problem is that's not helpful advice because you have to define what an A player is. And for me, what it is just somebody who has really high standards and is autonomous in a startup and just has high agency on their own and wants to have a positive impact. And I think there's different ways to test for that. But ultimately, it comes down to when you're working with them, do other people think that they're doing great work or not? Like if the other people don't think this person's amazing, then you've probably lowered your bar too far.
Do you then let those people go and just say, we got to move on? Or how do you do that and kind of keep that culture high if you realize someone's not a fit?
It's so easy to say, hire slow and fire fast. It's really easy to dispel that advice. It's actually really hard to do. It's hard to fire somebody because you brought them on. You probably worked a lot to get them to sign the papers and convince them to join you. And now, hope maybe pretty quickly you're realizing, oh, you made a mistake. So I think you have to build that muscle though. And it's just one of those things like anything that when you do it more, you do get better at it. And it's actually the more humane thing to do. Is if you're not comfortable with somebody, then they're probably not comfortable either. And so I think decreasing the amount of time between thinking the thought of, hey, I should probably let this person go, and actually letting them go is a valuable skill that founders do develop.
I will say, I think it's tough when you have people who are sort of in the in-between, where it's like, they're not an A player that you want, but maybe they're a B player. And like, so they're good, they're doing their job, they're not disruptive, they're maybe just not great at it. And then what do? Like, because if you fire them, all that work's gonna go back to your plate, on your plate or other people. And you create a weird cultural thing because not everyone understands if they're bad. Not everyone thinks they're bad. They're bad at their job. Like, that's the ones that are obvious. Everyone's like, oh, thank goodness that person's not here.
Yeah.
Everyone else, they're like, oh, like, you just fired someone. God, am I in trouble? Am I going to get fired now? Like, people start getting worried. So how do you deal with this sort of in-betweeners?
It's a good question. And I think these are ultimately very case-by-case basis that ideally you, especially today where you can have people with agency do so much, right? Like Claude Code their way to being more productive. I think you need to be pretty ruthless if you want to be competitive today. And actually, the fewer people you have, the more efficient you can be as a team generally, right? The more you add people, the more complex and the more slowed down you become. So I do think it is something that great companies do, is they're really, really selective, and they just try to only hire somebody if they have to, on that same line of thought as fire people if they can.
Yeah. And well, this is a pet peeve of mine about the idea of saying people should, like, I think the best companies have fewer and fewer employees, and they're hiring contractors who essentially have to live up to really high quality standards or get fired quickly. And there's no moral issue with firing a contractor. So like, you can do that all the time. I'm always annoyed when companies are hiring in-house people to run operations. I'm like, what are you doing? Like, that's not your core competency. It's a distraction. Mm-hmm. It's more, in fact, I think founders don't understand this. Like, every new person you hire is more overhead for you as a founder.
Right.
You deal with all the recruiting, the training, then the managing of them, and all these other pieces. When they get sick and they have family issues, like, all these things happen. It's just humans. But like, that's overhead, and that's time consuming. And if it's not someone who is directly related to your core product, that will slow you down, even if you think it will free you up. So instead, hire contractors until you're 100% certain you actually need to bring that in-house. Until then, don't do it, is my strongly held view. So like, go back to culture for a second. So another thing about culture, right? Speaking of like agency or sense of urgency, do you feel like with all of your companies, you created that sense of urgency? And if yes, like, how did you go about doing that? Like, what made you different? Like, you had 3 exits that are pretty decent. Like, why do you think your companies were able to do that? Okay, they right ideas, right place, right time, but also right team. Like, how did you create that sense of urgency to get this done? Because I see so many companies that they might have some of the other pieces. They don't have that urgency quite the right way. The culture's off a little bit. What are the things how did you inculcate a cultural mindset of like excellence or urgency?
I think this just comes down to the composition of the team and how people are wired. And I think founders just have that sense intrinsically, and the culture of the firm is set by the people who start it.
So were you someone who's working like 996 or whatever, like the Chinese sort of proverb, where you just like, hey, Warren is always on and he's always doing stuff, and you were just that founder?
I do have a hard time compartmentalizing. So yeah, I work a lot and I enjoy it. I think I try to integrate my interests in my work. Yeah, but certainly I don't think it's healthy to just sprint all the time, right? So there are times where you have to know when to pull back and be thoughtful and think about strategy. And, you look for people who enjoy work. And ideally, if somebody's having fun, it's so hard to compete with them. Like, that's it. So you're just trying to find something that you find fun and other people find fun too. And that's it.
So remote versus in-person for early teams.
Yeah, I think that you get so much more energy actually being in person with people. I think you can there are companies that are successful that are remote too. And so there are pros and cons for sure. Our view for the early days of a startup company is it's best to be in person.
Yeah. How do you decide, or what advice do you give founders about whether to be super scrappy and super frugal versus when to spend money? Like, I say this in some ways because I think my personal take is founders too far on the scrappy side of things and forget that they were given money to invest it, not to hold it in a bank account and be as cheap as possible.
Yeah, it's a balancing act. I think there's, you have to think about the opportunity cost of your time as a founder and really think about where you can get the most leverage. So if you can delegate something, you should delegate it and just really focus on those key high leverage things like being, if it's founder-led marketing, if it's product, if it's growth, if it's fundraising, as much time in those areas and as little time as possible in the kind of commodity operations of the company. I think that's best.
Yeah, no, look, I would agree. Delegate everything. Focus only on things that only you as a founder can do. So, okay, so Knowable sells, you go work at Medium for 3 years as a VP. What made you then decide to leave Knowable or leave a Medium and then head into becoming like, why become a VC? And this is something you and I spoke about a bunch when you were thinking through it. But why become a VC, right? You're clearly someone who's great at building companies. You have great ideas. You enjoy these pieces. Why become a venture capitalist? Why go to the dark side in a sense?
Yeah, so I did this program through First Round called Angel Track, which basically helps you become more professional investor or angel investor. And I had, invested as an angel and friends companies. And I realized, I really like thinking about opportunities in the future. And I love, supporting my founder friends. And I realized, this is maybe something I could do professionally. And I thought I could actually be potentially great at this because I've been a founder. I also have an experience in finance coming out of college. So I started scouting for Andreessen Horowitz and made some investments and got some early kind of markups and success and realized, this is really fun and gratifying. And I just realized that, going back to that regret minimization, like I would regret not seeing if I can be great at this. And I met Pejman and Mar, who had started Pear VC. I think they started in 2013, and was really impressed with them. Was really impressed with the platform that they built. They were looking to hire a partner to focus primarily on consumer. And given the fact that I had been a consumer founder before, and all the partners at the fund are former operators or founders, it felt like a really, really great fit. And yeah, I joined in 2024.
Nice. You've seen a lot. And so on that note, what are some key words or words you take from an investor perspective for consumer founders trying to build in today's world? Like, what are the biggest risks and challenges? Because consumers, to me, has always been really difficult no matter what.
Yeah.
It feels like it's even harder nowadays to some extent with, you gotta build a company that can grow as fast as ChatGPT did to do well. It's like, that's one in a billion, basically.
I don't know about that. I don't think you have to grow, as fast as ChatGPT to be successful. There are, obviously that would be great, but there are other paths to being successful. I think consumer is hard. It's also fun. It is just really gratifying to build something that people use. And there are just some people who are wired that way and can't do anything else. And so those are the people that I'm really excited to work with. In terms of advice, it's a lot of what we talked about here. It's have a unique insight, move really quickly to validate or invalidate that. We didn't talk about this a lot, but actually just empathy and craftsmanship do matter too. It's like, do you really care about the consumer? Like, it shows if you're really trying to make something that delights somebody and brings a lot of value into their life and over delivers. And those are the companies that I think can break through. And I actually think it's a really interesting time to be building a consumer because consumers, they drive 70% of GDP. So it's a huge market. And when you're thinking about venture, 14 out of the 20 biggest IPOs were consumer companies in the past 10 years. And, I think 9 out of the top 10 were consumer companies. So venture is actually really well built for consumer companies. It's just actually harder to get to that first floor level. But when they work, they get really big. The reason why I think it's an especially good time is AI does represent a platform shift. Consumers are more willing to try new products than they ever have been before. And so Suno is doing over $100 million of revenue already. Gamma is doing over $100 million of revenue. I'm actually interviewing the CEO this afternoon at Pear. And it's just an incredible story, right? It's like, wow.
I did a presentation this morning that I made on Gamma.
That's amazing. There you go. Right. And so it's like, hey, that's a product that did not exist 3 years ago, 4 years ago, and has grown over $100 million in revenue with, mostly product-led growth. Consumers are willing to try new things. There are new opportunities that are happening because of this technology. I think that ChatGPT is obviously a formidable competitor, but I actually don't think they're going to do everything perfectly well. And there's just like opportunities for innovation and creativity that are going to create lasting, durable businesses.
Walk me through just really on the personal front, really briefly. I always like to learn from people. How do you think, like, you're someone who works so hard and builds so much and gets deep in the work that you're doing. How do you think through like work-life unity in those elements?
I really like that phrase. Actually, I haven't heard work-life unity. I've think about the term integrating a lot. And so I just try to, I like doing things that I feel like I'm having fun with. And I try to do more of that and less of the stuff that I don't find fun. So I love working with smart, ambitious entrepreneurs. I feel really lucky that I get paid to go have conversations with smart people and, pick ones that I really believe in and resonate with and support them. That feels to me like a nice integration. And I actually like talking about my job with my kids and my wife. And that I think is a really good sign. And a lot of my friends are founders or fellow investors. And so I just encourage anybody to think about, notice where you have fun and try to lean into that and spend less time doing the stuff where you notice yourself feeling drained or have less energy.
So essentially the integration of all those pieces. And then so you can kind of do the things you enjoy with the people you enjoy and also integrate your family in time to work out and stay healthy and all these other pieces and hopefully do it all together.
Trying my best over.
We all are. So if you kind of quick lightning round questions for you, is there a metric that you think is overhyped for startups, maybe for consumer startups more than anything else?
I think ARR is a dangerous metric if you don't think about COGS and cost of customer acquisition.
Yeah, for sure. If you weren't investing right now, what would you be doing instead?
I would probably I'd still want to work with founders and help people create new technology that I think is actually good for consumers. Coach maybe, or a founder again.
Yeah, no, it's interesting. I do wonder sometimes, there's a question for us at some other point when we hang out, but is more around like, are there different times in people's lives to do different things? Like, is there a world where like, do we both as about the same people are about the same age stay in the tech space forever because it's what we know, what we enjoy, you get to learn new things every single day? Or do you say, hey, I'm going to go try something just totally different and off the wall at some point in life? It's something I struggle with and I'm curious about. When you think about like the single piece of advice, if you could break down two things. One, what is the advice you would give your younger self if you look back 20 years ago when you're kind of getting started? What sort of advice would you have given yourself then?
I think generally just worrying doesn't really help. It's just sort of this antiquated relic of our caveman days. And so just spend less time worrying and more time enjoying. That's
good. Don't you think founders need to have a level of anxiety though that's sort of unreasonable sometimes too? Like that anxiety, it's not healthy for you by any means.
Yeah.
It's also helpful to push you to work harder and do more.
Yeah, I think about this a lot with my kids and what I want for them. And I want them to be just intrinsically motivated rather than fear motivated. I actually think the best decisions come from places of confidence and curiosity rather than fear.
So maybe related to that, your answer might be different, but is there a single piece of advice that you would give to every entrepreneur to hopefully achieve excellence? If you could break all this down, our entire conversation, what's your single piece of advice? Like, if there's anything you remember from this, do this, and you have a chance at being excellent.
High pressure. What comes up for me is to actually be true to yourself and actually dig really deep about what you want to build and focus on that. And I think it's very easy to just kind of get pulled into this thing I heard on, TechCrunch or whatever. And I think chasing other people's ideas is dangerous for a lot of people.
Yeah, no, too few people have original ideas is maybe the way to put it. And too many people chase other people's ideas or fads. And I hope we can all be original thinkers in our lives. Warren, how can people find you, get in touch, learn more about you or Pear if they want to follow up after this?
Yeah, I'm on Twitter or X at www.shaef, SHAEF. I'm also on LinkedIn. Feel free to add me and follow me there. Pear has a wonderful program for early stage companies that we call Pear X, and encourage people to check it out and apply if they're thinking about taking the plunge as entrepreneurs.
Warren, thank you so much for being on this today. It's always a pleasure spending time with you, and also our time is precious. So any of it you spend with me you can't get it back. So I appreciate you gifting it to me and my listeners. So thank you so much for being on.
Grateful to know you, Adam. Thank you for the thoughtful questions and super to spend time with you.